It's time to check your money with America's Money Maven, Vicki Brackens. Vicki Brackens is the president of Brackens Financial Solutions Network, LLC, and the registered representative of LPL Financial, member SIPC. Vicki, good day to you.
Well, good day to you, George, too. Okay, listen, I'm thinking about the fact that it's finally spring.
Yeah.
And
Well, it's about to be it's actually summer now, about to be summer.
Is it summer already? Listen, okay, I'm terrible with these calendar things, but I know that I'm very, very happy to be here this week. Here's the thing that I want to say.
Okay.
I want to apologize in front of my conversation.
Okay.
Because I know that some people are going to say, you sound like a broken record, Vicki Brackens, but I'm not a broken record. The Federal Reserve is a broken record. And here's what I mean by that. This week, again, we had the FOMC meeting, meaning the Federal Reserve's meeting concerning the economy and interest rates. And I think some of the information that they provided, while it may sound like a broken record, had some nuances in there that we really should pay attention to. So that's what I'm going to deal with this week, again, because there's some action steps that are obvious in what became part of the conversation this week. So the Federal Reserve decided to hold interest rates steady. And that means now for the fourth meeting now, we've had no change as far as interest rates are concerned. But what does that really mean for your money? Well, here's the things that are starting to become obvious. When they said that they had no confidence or had not acquired confidence to be sure that inflation had been abated, they were setting, everyone reacted, well, more than likely later on in the year, there'll be some cuts in interest rates and things will get back to what we call normal, or what had been expected with the markets as far as a lowering of the interest rate environment. This time in the meeting, they made it very obvious from looking at how the Fed governors individually voted that we probably won't see any interest rate cuts this year until the very end of the year, if at all. So that tells us that the current rates, which the benchmark rate is somewhere around 5.25 to 5.5, is definitely going to be in play for the rest of the year. So what should you do, George? You know what you should do?
What should I do?
Take advantage of it. This is a great time for individuals who have been saving or have money sitting in cash to make up some long overdue ground in the way that their cash is being credited as far as their interest rates are concerned. Because now we know the interest rate environment is going to stay in that range for a much longer period. And in fact, if you looked at some of the additional information that they discussed, probably even though 5.25 to 5.5 is the range, and for the next, say, 12 months or so, their projection even over the next 3 years still keeps us in the 4 to 4.5 range for another year, and not really dropping into the 4 range until 2026. Take advantage of this. How can you take advantage of this?
Yeah, I was going to say, what might that look like?
Okay, if you remember, what was it, about a month ago, I said, let's talk about the 4 questions that you're going to be asked when you walk into the bank. Money market rates, CDs, okay, what happened with high yield savings accounts? Stop and look at your accounts that you have cash, substantial amount of cash in, not your checking account, but your other savings vehicles, unless you have a lot of extra money sitting in your checking account, which I have found out folks got thousands of dollars sitting in the checking account at 0.01. But look at where you have accumulated cash and make a decision to move that cash to a higher yielding vehicle, either through your bank or through a mutual fund money market account, so that you can get the advantage of the fact that we have higher rates that are available for cash savings over the next 12, 14, 24, 36 months. Easy peasy kind of increases, because cash, especially in the banks, you've got the FDIC insurance. And if you're looking at mutual funds, you've got SIPC insurance. and you have full liquidity if you're talking about money market accounts, or partial liquidity if you're talking about CD accounts. What was that? Marriage versus dating. You remember that, George? We
That's
talked
right.
about
I remember
marriage
that.
versus dating. Definitely, though, don't sit around and wait for and let your cash languish at a rate that is below the inflationary rate, because we've had an advantage here. Because otherwise, what you're doing is this: credit card rates are going to go up. Credit card rates, as far as your servicing areas, which were probably in March around 16.34% or so, as far as the average, now is nearly 21% in many of the cases. As far as the interest rates that are being charged, interest rates on mortgages are somewhere around 7% at this point in time. They were about a year and a half ago, somewhere around the 4.4 range. Auto loans have gone up, but not quite as much, because there are lots of competition going on in the auto industry. So the rates are higher, but not as dramatically as the rest of the consumer goods areas. And student loans, even. Student loan rates have gone up from about 4.99 to 5.5, and could be somewhere in 24 and 25 up to as much as 6.53. So you've got to have your cash working, and you can do this so easily. So here is a time for an advantage, and I hope that everybody says, Vicki Brackens, you're saying this too much, but instead of saying I'm saying it too much, do something about it. Take your cash and increase the rate of return through money market accounts, CDs, high yield savings accounts.
Vicki, I learned that lesson the hard way. I had something sitting in just a straight up account, and at the last minute, I realized I could have moved that to a money market account, and then right after I moved it, I had to take it out. But I had it sitting there for years, and so yeah, listen to what Vicki said.
All right. Well, if you have additional questions on this subject or any other, feel free to give me a call at area code 315-930-4499, 315-930-4499, or reach us at info@Brackens FSN, Frank Sally Nancy, FSN.com. We'd be happy to talk to you. Subscribe and share and comment to this particular video. And at this point in time, George, I will say our plate is full.
Vicki Brackens is the president of Brackens Financial Solutions Network, LLC, and the registered representative of LPL Financial, member SIPC. She is America's money maven.